I have backtested hundreds of strategies. Here are 4 lesser known indicators that you should know. I'm Manir, also known as Ghostwalk Trades on Twitter, and I also run Unbiased Trading, an agency where we can backtest or automate your trading strategies. Now for context. Indicators at the end of the day are simply mathematical calculations. No single indicator is magical or special, but some do work better than others. Here are 4 underrated ones that you should know. First is the volume price trend. So this combines price action with volume to determine the strength of the trend. It can be quite effective in confirming price trends, and a rising VPT indicates buying pressure, while a falling VPT suggests selling pressure. This is personally an indicator I've actually used when testing out some strategies, and it has actually been quite effective for helping me with confirmation of trend. I would say it's not as effective in futures as you'd maybe suspect, but I think in equities it can actually be quite a solid indicator to test out. 2 is Vortex. This indicator plots 2 oscillating lines together, 1 to identify positive trend movements and 2 to identify negative trend movements. I've used it previously to identify the start of new trends through the crossovers, and this has actually been a really solid strategy where you can actually find something quite profitable simply with just those 2 conditions. You would need a bit of filtering still, just because there are quite a lot of crossovers on a lower time frame, so you'd probably be wanting to run it on a 30 to 60 minute time frame, at least from my testing on futures. But this can actually be a really solid indicator, so I'll definitely look into this one. And also I like how simple it is. And for the most part, you'd only really need to add maybe 1 to 2 extra filtering conditions. Now, number 3 is Gopalariskna, I believe is how you pronounce it. Don't kill me if I'm getting that one wrong, but it's basically an indicator that measures price volatility by comparing the current trading range to recent ranges. It can really help identify choppy or smooth price action. And it's actually quite useful for filtering out trend or range-bound markets. So if you're, for example, doing a trend following strategy, you want to identify times where it's trending compared to range-bound times, which would be better for mean reversion, where you wouldn't want as many signals for trend following strategies because that would just be a lot of noise and a lot of chop, for example. Another very similar indicator to this is the choppiness index. I use that one quite a lot, but it's good to experiment between different approaches of determining these things, and you can see which one actually works best for your particular market, because choppiness index has been working quite well for me in futures, but this may work way better in crypto, for example. Different markets can react differently to different indicators, at least from my experience of how effective they can be. And then lastly is the zero lag exponential moving average. This was developed to eliminate lag from moving averages and was actually introduced in the book Rocket Science for Traders. While it doesn't truly remove lag, it is an improvement. Now, I did see some hate or skepticism of why you'd ever use the zero lag exponential moving average. I would say the primary reason you're doing it is for smoothing out price action. Now, obviously, there's other ways you can smooth out price action. You could do a median approach, etc. But having this lower lag situation, you can smooth out price action. So on shorter time frames, you can get more responsive triggers for trend filtering, at least in my opinion. So if you're doing any lower time kind of time frame, it could actually be applied to high time frame as well. But still, if you're trying to get as responsive entry and exit, so most likely this would be more useful in mean reversion strategies than trend following, because you wouldn't need to be this responsive in trend following. Most of the time in trend following, you're more trying to capture the meat of the move instead of trying to get in and out very quickly compared to mean reversion. This can be a great way to do directional filtering on that side of things. Now give a try testing ideas with these indicators. Each offer unique benefits when integrated into a strategy, and how I like to say, curiosity is really the best edge. So if you find any of these interesting, go out today or this weekend and test 1 or 2 strategies using them and see if you find anything beneficial. Now, if you find this type of content valuable and want more every single week, feel free to follow me at Ghostwalk Trades on Twitter for more. And as a last mention, the bootcamp, the backtesting bootcamp that will be linked in the top of the description, is still open until the end of this weekend. So if you would like to become more systematic in 2025, feel free to click that link and you can get more information. There's also a free essential backtesting starter kit that you can get completely for free. Now, apart from that, I hope you have a great rest of your day.